Think your credit score and income are the only things that lenders care about? Think again. Bank statements are like a behind-the-scenes look into your financial habits, and one red flag could delay or derail your mortgage approval. Let's talk about what lenders are really looking for when they review your statements and what you can do to make sure that the activity in your bank account doesn't raise eyebrows. Lenders don't just want to know you have money. They want to know where it came from, how you manage it, and whether it paints a picture of financial stability. They're not just counting dollars. They're looking for consistency, reliability, and signs of serious adulting. Stuff that shows that you're ready to take on a mortgage. Let's break down a few red flags that can cause concern for underwriters. 1. Large, unexplained deposits. Do you have a sudden $5,000 deposit with no explanation? Lenders need to source and document it. Unverified funds might be a loan from a friend, cash from an illegal business, or other cash from an unknown source. If it's not clearly documented, it could delay your loan or worse, result in denial. 2. Overdrafts and bounced checks. A single overdraft, probably not going to be a deal breaker, but consistent overdrafts or bounced checks suggest poor money management. A red flag for any lender. It signals potential financial mismanagement or instability. 3. Unexplained payments to individuals or companies. If your bank statements show regular withdrawals that aren't tied to any debts on your credit report, the lender may assume you have undisclosed debt. These payments, like child support, alimony, or private loans, must be counted in your debt-to-income ratio. So be prepared to explain them during the mortgage process. 4. Incomplete or missing bank statements. When submitting bank documents, make sure you're providing full, official statements, not just partial printouts. Printouts often miss key details like your name, account number, or address, which lenders require. Always download the complete PDF directly from your bank's website. And don't skip blank pages. If your statement says page 1 of 10, the underwriter expects all 10 pages, even if one is blank. Leaving anything out can delay your loan approval. Many lenders can pull statements directly from your bank using a third-party service, which is also a good way to avoid delays. 5. How to prepare your bank statements. Before you apply, take a close look at the past 2 to 3 months of statements. Ask yourself, would this make a lender feel confident or no? Here's what to avoid. Unusual or large cash deposits that don't have any documentation, excessive or risky spending patterns, low balances or repeated overdrafts. Make sure the funds for your down payment are sourced and seasoned. That means that they've been in your account for at least 60 days, along with clear documentation showing where they came from. Your bank statements tell a story, and lenders are reading every single line. Clean up your financial activity now to avoid hiccups later. A little prep work goes a long way to ensuring a smooth approval process. For more tips on getting mortgage ready and understanding the ins and outs of home financing, visit mortgageresearch.com. If you found value in this video, give it a like, subscribe, and tap that notification bell so you don't miss future updates. And as always, if you have questions, drop them in the comments below. We're here to help. Thanks so much for watching, and here's to your smooth path to homeownership.